Hey, good morning. Good Monday morning. It is March 30th, and we are going to be talking about stock investing. And I am joined by Daryl, who's going to be covering the technicals, and I'm going to be covering the fundamentals. We're going to talk about the stock market. We're going to talk about what trends we're seeing, and we're going to dive into some stocks that we have in mind. And we are open to taking your nominations on stocks you would like to cover as well. How you doing this morning, Daryl?
I'm doing great, Victor. It's really good to be here.
It is great to be here as well. We kind of took a hiatus last week. I was in New York City. It was a good week, good productive week, but just could not get myself in a place where I could live stream. So it was kind of a week off, and we're back. Now, this is a shorter week, right? Friday, we do not trade.
That's
Um,
right.
And I know the stock market's closed. Will the bond market be open or closed on Friday? I
I
don't know that.
presume that they'll all be closed, but I don't know that for sure. I haven't looked at the schedule. I just knew it was a market holiday.
That's right. So
It's not
that
a
is
fed,
what.
it's not a federal holiday, so we still get the jobs report on Friday.
Okay. Yeah, and the market looks to be headed higher. We are about 26 minutes before the market opens, and the news, obviously the biggest news headline is this war. And is it going to get resolved, or is it going to get uglier and uglier? So um, there's a lot of headlines out there, and I'm not sure what's going to happen, frankly.
Me either.
I'm hoping I could tell you that if I had a vote, it'd be like, hey, let's end this thing quick. And I'm not a big fan of wars, and but that's just me. Um, but we'll see how quickly it ends. Crude oil is rising this morning, which is going to make energy stocks work a little better. Their cash flows are going to be better. Their profits are going to be better. It's going to be a good year for Chevron, Exxon, those types of companies. Gold prices are higher. Now this year, right? I've been complaining probably for, geez, a year and maybe a little longer that at times stock prices just are getting too expensive. It's really hard to find stocks that are fundamentally a good investing idea. Because a great investing idea is one where you have a stock, you really like their business qualitatively, you love their business, you love what they're doing, you really believe in the space, you understand the space, you like the momentum they have, both from a business and their stock is showing momentum, and you really like their valuation. Their valuation looks great. They produce a lot of profits, they're growing their top line really well, they're generating a lot of free cash flow, and it has a great valuation. I mean, that's a beautiful thing. When all those boxes are checked, it looks good. Well, when stock prices are really expensive, it's hard to check the boxes because you're like, geez, I'm having to buy a stock at fair value, or maybe some stocks I see that are priced too high. They're priced at a premium. It's hard to buy those stocks when they're priced at a premium. But when you have a correction like the one we're in, we're right in the middle of it. I don't know if it's going to go further down. I don't know if this is the bottom, so to speak, but the stock prices are very attractive. I'm looking at stock after stock, especially what was labeled the Mag 7, the top most expensive stocks. Their valuations are looking good. PE ratios look very reasonable, to put it modestly, and in some cases, really attractive. So I'm going to buy. I'm buying. I'm buying businesses I want to be an owner in. So that's my plan, and it's worked out every single time in my adult life without fail. Now, it doesn't happen overnight. It's not like, okay, great, I bought it today and it's up tomorrow. Nope. Might take some time, but on every occasion, and let's just go back 1 year, we had this real bad sell off. And then from there, those who said, I'm a buyer of this sell off, boy, they look good, huh? Remember that, Daryl? Remember last
Yep.
year?
Yep.
This was awesome.
The sell
So
off last year was 37 days, and we're at 42 days right now.
now the the situation was a different situation, right? We
Yep.
weren't. It wasn't a war. It was tariffs, and so
Easily reversible. This isn't easily reversible.
I'm not an expert in tariffs, and I'm not expert in war. So I'll leave it up to the experts to comment on that. But I could just tell you that I bought stocks. I bought
Yep.
stocks a year ago. So if the market's going to give me a discount on, stocks, especially the great ones, Microsoft, Google, Meta, Nvidia, I'll buy them. It's like buy when the market just gives out really good prices. I don't think we're in an extreme amount of fear. I don't think it's like everybody's fearful and selling off, at whatever price. I don't think we're in that case, because when you look at the 6 month, this has just kind of been a grinder. I mean, more recently, right? From what is that? From about a month ago to now, it has been kind of a pretty good move. But you see over the 6 month, this has kind of been rotating. We've been rotating out of the big caps into, other sectors, and some inflows have gone into some sectors that hadn't been as popular before. So that's been an interesting situation here, but my intent still stands, which is, it's a good time to buy. And I did raise capital. I was raising capital here by selling off some stocks, trimming back. I would kind of vote a stock off the island, so to speak. And I liked all my stocks, but I would challenge myself, especially on weekends. Okay, you got to sell 2 stocks. You got to pick 2 stocks. They got to be sold. Pick the weakest of the strong stocks, and that's it. And I would do that, and I built up a nice cash pile. The cash pile is smaller, but I've got some bonds that are redeeming here in the first 2 weeks of April. So that's going to reload the chambers, and we are going to be firing on all chambers here in April. So if the market keeps going lower, I'll just continue to dollar cost average into stocks. So how are you dealing with this market here, Daryl?
I also did some trimming for some profitable stocks just to raise some cash. I didn't want to be forced into, because I'm retired. I rely on my portfolio for income right now. So I didn't want to be forced to sell at an inopportune time. So I did some trimming on some stocks. Meta was one of the casualties of that because I was just about break even and they were struggling a bit. And I saw a chart pattern that didn't look very good. So I took that one out of my portfolio just so I would have some cash. I want to be able to pay my expenses without having to worry about selling stocks when they're down, and be able to buy some when they are looking really good. So I was following a similar methodology as you were.
Man, you kind of dodged a bullet on Meta, because they got hammered last week.
Yep,
So.
I shared that in a video that I saw it coming. I didn't expect it to come in less than a week, but that pattern definitely played out exactly as it was anticipated it would.
Very good. So we got a lot of people on. Good to see all of you guys. Good to see you, Ricardo Anderson. Great to see you. Zubio, good to see you. And Dre, great to see you. Good morning, sir. All right, so we covered the stock market. A couple things that I wanted to tend to. All right, so the contest, Genetic Smite was so far in the lead. It was like, geez, I can barely see him. Got to use binoculars to see how far the guy is ahead of everybody. And it looks like ALM's kind of pulled back a little bit. So it's going to be a little more competitive than expected. He's probably going to take the prize for the first quarter as picking the number one stock for the first quarter of 2026. But it's good to see that it is beginning to get a little more competitive. We'll see who. I'm sure one of these stocks down here is going to catch fire and move up the ranks. We'll see who takes the second quarter. On the second quarter, what I'm going to do is I'm going to take the stock price on April 1st and then see which one performs the best, in the quarter that ends June 30th. But looks like Genetic Smite's going to be the winner. He'll get an annual subscription to Stock Analysis. And he's just got to hang on for 2 days. He's got to go on his prevent defense, like in football. Don't let your stock drop too much, and we'll see how it goes. That's been going on there.
You've mentioned the end of the quarter a couple times, so I want to make sure everyone's aware that hedge funds and retirement funds and all that stuff are doing their portfolio rebalancing at the end of the quarter. So even though we're up this morning, that is going to contribute to some volatility this week. So just be aware that could happen.
Thank you. Excellent. So let's get into some stocks. We don't have any giant earnings. We're in that. Right now we're watching the war, we're watching oil prices and the economy. Let's talk about the economy real quick. So I think the economy is headed down, but it's not too bad. It's like, I think we're in a decent economy, but the situation is not helping the economy. We had a rise in interest rates, not a big one, but a little bit of a rise. When everybody is expecting, okay, this year, 2026, we're going to have lower interest rates. But that's just not happened because the effect on the bond market that we've seen due to the war, oil prices, other factors have actually caused interest rates to rise. Now, did they rise to a really high level where, oh my God, I'm paying 20% on a credit card or on a car loan? Nope, not that high. But it does make a difference if you're seeing a 50 basis point rise over interest rates. The way you discount stocks makes for lower valuations. They compete for capital. So if somebody's, especially these big institutions, they're like, hey, do I put my money in bonds and make 7% and pretty much have a low risk, situation? Or do I go into the stock market hoping that I make 10%? But boy, the stock market's pretty wicked right now. So they compete for capital. And if you don't have that capital flowing into stocks, we don't see stocks rising. So I think the economy is heading down. I think it's getting a little worse. It's not terrible. And this war with high oil prices is definitely making sentiment and problems for the economy. I remember in 2022, we had high oil prices, the Ukraine war, and it was not good for stocks. It was not good for the economy. Now, the economy back then was propped up due to government stimulus from the COVID years, right? So we had COVID influence there, but we don't have COVID right now, or we don't have stimulus due to COVID. So the long and the short of it is, I think the economy is is not firing on all 8 cylinders. Maybe we're firing on 6 to 7. And what's your take on the economy?
Yeah, it all depends on how long this confrontation goes on. The longer oil stays higher, the worse impact I think it'll have on the economy overall and prices and what have you. So hopefully we can get this resolved fairly quickly, and then you have the repairs that have to be done in the oil infrastructure. So it's definitely interesting to watch, but you said a couple of times, and I think it's important to remember, we don't have any control over that. What we have control over is what we do in our portfolio. So I always try
Yeah.
to keep that in mind. I need to react to what's going on, but I don't have any control over that other than what I do in my portfolio.
The thought that came to mind for me is it seems, especially like the media is pretty good at this, is, they'll state something and maybe the way that I hear it, maybe they're intending on this is they state it as if, hey, this changed, like, hey, we have higher oil prices and they're going to be high forever. It's like, no,
Right.
they're not going to be high forever. They're going to be high for a while. It's going to soak up a lot of discretionary spend. It's going to soak up a lot of, cost. But where I'm trying to go is I always remind myself of the North Star, which is, it's a great time to be an investor. Um, it's a great time to see technology really just begin to take off with the AI stuff. I've been doing a lot of stuff with AI. So my North Star is the future is great. It's going to be a bumpy road, kind of like this graph, right? It's not a straight line. It's not a beautiful straight line where everybody's like, hey, let's set it and forget it. Nope. Uh, we're going to run into some moments like 2022 was a good one. That one did kind of make everybody kind of miserable for a while. And then we had another sell off here. This one was a doozy. And of course, we had last year. That was a doozy. That was a quick one. I was like, geez, man, shock treatment. And very quickly, everybody jumped in and said, hoo, good prices. Bam. Let's get back to go. So now we've got this little down move. Got some bad factors weighing on us. Got a war, got high oil prices. The economy isn't doing all that great, but it's not like it's going to be like that forever. Now, buying when conditions are bad is when you can make a lot of money. Now, you got to pick your lane. If you're an investor / trader wants to make money this month, you can find ways to do that. You can find ways in the next 30 days that you can generate some income and have some wins. Okay. But I'm in the lane where I want to make a lot of money over the next decade. I want to make millions over the next decade. And that's my goal. That's my plan, my strategy. And right now, the market is offering me great prices. I have to ignore some noise, focus on the right signals, and then make good investments. All right. Any last thoughts on the economy before we start cooking with gas and look at some stocks?
Yeah, we'll look at some stocks. I don't have anything more to say on the economy.
All right. We got our first sponsored analysis from Anderson. He wants to look at Booking. And Booking is a stock that's outperformed Airbnb. It's been a good one. We'll jump into that one. Let's see here. Now, I got Booking evaluated, but I think I'm going to need to update some numbers and then we'll compare it. We'll do a face-off against Airbnb. And what's the other one? What's the third one? I can't think about it. It used to be Expedia. Is it still Expedia? And they merged with Verbo. We'll take a look at that one
That's a
too.
good question. I don't know for sure.
All right. So if you look at this chart, to me, these guys just really did well. You have a stock that went from, and they have a high dollar denomination stock. It went from, call it 1650 up to 4,000. So you more than doubled your money. You are a happy camper. You are in Happyville overall. Over the 1 year, we've had a lot of pressure against the category or the industry they're in. Is they're in travel. This is a discretionary spend. Do you have to go on vacation? No. Is it nice to go on vacation? Yes. Is it interesting to go on vacations? Absolutely. Is it neat to go on trips? Yes. And Booking is in the business of providing hotel stays. So you can go on the Booking site, find a great hotel, along with other travel services that they offer on their website. They also do private home rentals, similar to Airbnb. And they run their business quite effectively. And over the 1 year, due to the stress on consumer discretionary travel, we're seeing a stock sell off. Is it an opportunity? That's the question. Forward P looks terrific at 15. Okay, that looks like a good forward PE. Dividend is 1%. Analysts think there's a discount of 44.9. Looking at their growth is, what are we dealing with here? We are dealing with US dollars. $27 billion revenue company growing at 13.3%. That looks pretty darn good. 16% in the last quarter. Really like seeing that. So the consumer, at least for the most recent quarter that was closed, is traveling. They're traveling and they're having a good time. Gross profit's really high. So these guys are handling the transaction when people want to travel. I'm going to go to Booking and find a nice place and buy some other travel services. Booking gladly takes care of that, and they have very good margins. Beautiful 87% margin. That's excellent. So you got a business that's growing 13, 14% top line on a pretty big number. They have very high gross margins. Profit margins look good as well. Free cash flow looks terrific. So those numbers look real good to me. When we look at the forecast, now this forecast, one thing I would say is if you forecasted this business like on January 1st, your forecast is probably wrong because you didn't expect a war. Now, if you forecasted this business yesterday, you'd probably be more correct because you're like, hey, we got this war, right? And we're going to cover WeRide if we have time. And WeRide provides autonomous vehicles. Well, they decided to go big in the Middle East in a couple countries. Well, that's a problem because there's a war going on. So are people going to travel there and take WeRides? Probably not. So I think that's going to be a problem for them. And I think travel, most definitely to some parts of the world, is going to go down dramatically. Other parts of the world, I would think is going to go down a little bit. If anything, just a modest reduction because people are like, well, maybe I should keep a little more cash in my pocket. And we will see an economy for travel that isn't as good as it was last year. So the forecast does look pretty sensible. They're supposed to keep growing. It'll be super interesting to see their next earnings report and hear the comments of management because they are probably studying the situation with the war and how it's going to affect travel, and are probably going to tell us what's going to happen with travel and how kind of revenues does Booking expect to have. But right now, that's a big question mark. The growth looks okay, and the earnings per share growth looks fantastic. Their forward PE is going to keep dropping. So that looks really good. All right, so let me kick it over to Daryl. While Daryl looks at the technicals, I am going to go through their financials. I'm going to update my valuation. We'll take a look at my valuation when I share my screen in a few minutes.
I'm going to start off with the 5-year view. I want to take a look at the pricing levels that they've touched a few times. And I have this level right here where they traded up to that level in July of 2024. They almost came down and touched it in the tariff announcements, and then they traded a bit below it here. So that seems to be, if I'm just trying to pick out a level that's closest to where they're trading, that seems to be a fairly good level there. So let's go into a year. Look at this volume. When they were in their downdraft here in February, the volume was 2 or 3 times normal average volume, which I use a 50-day moving average on volume. That's the blue line that travels behind these volume bars. Here the last, I don't know, 3 weeks or 4 weeks, we've seen below average volume for the most part. So they did come down and test that longer term support resistance line that we drew back in the 5-year view. And they seem to have found support there and bounced off of that. We got a lot of white candles, which is really something that you want to see. But they came up and hit this downtrend line and the prices got rejected off that line. There, even on that big bounce, was 8.5% that day. They hit that and then bounced downwards, came up and tried testing it again and seemed to be pushed back. So they seem to be fighting a little battle here in this price range. They are trading below a downward sloping 200, 50-day, the 20-day, 21-day is also declining at the moment. Friday, a lot of stocks took pretty big hits on that day, but it wasn't a big volume day. It was pretty light volume all last week. We see the RSIs drop below the 40 line. They're currently at 38. Looks like the market's just opened. I saw the price change here. We did get a bearish crossover in bearish territory. One of the things I see here is all of this accumulation. This is pretty amazing. So they are drifting down since they bottomed out here somewhere in the 12th of February or so. Ran up to peak accumulation on the 10th of March and have been a little bit of distribution, but it's slow and steady. The money flow has dropped back into, I'm still going to call it bullish at the moment. This won't update until the end of the day. Accumulation distribution also doesn't update till the end of the day. But they are above the green line, which is set at 0.05. When you're below 0.05 but above minus 0.05, you're kind of in neutral territory. But this is still positive, even though the money flow has tailed off a little bit, and that's what causes the accumulation line to go down. So they do seem to have pretty good support right here, Anderson, at 39.55 or so, but they keep hitting this downward sloping resistance line. And if they can break out above that and maintain momentum above that pricing, then they're going to have the 50-day to contend with, which is not much above where they're currently trading. And then if we take a quick look at just where they're trading in relation to all of their 50 and 200 day. They are in a downtrend, the bearish sentiment. They're about 11.5% from their 50-day moving average, and this is when I refreshed before the market opened. And they're about 21.6% below their 200-day. They're about 7.88% off of their 52-week low and 30.44% below their 52-week high.
Excellent work, sir. All right. Let me get my screens ready here. Okay. So booking, it's looking good. I mean, the numbers are solid, really good cash flow. That cash flow I'm growing at by 10% in the first 4 years. And I have a terminal growth rate of 4%. And I think that, the future for travel is a good one where you're seeing more and more services get offered on booking. I totally see autonomous, being a booking feature in the future, meaning you're in a hotel stay and you're like, hey, I want to go out to dinner. And it automatically says, hey, you want me to schedule a ride for you, pick you up at the hotel or your private rental. And it takes you over to your dinner destination and it's ready for you to call it again. And maybe booking kind of grabs some of that revenue in partnership with whomever. And we're off to the races. Maybe they partner with Waymo or Uber or somebody. But overall, this business, the cash flows are terrific. They're going to keep growing that top line. So the business is healthy and they're actually outperforming Airbnb. Their balance sheet's excellent, almost 1-to-1 on cash versus debt. So they're discounted by 52% if we value the business based on cash flows. I am going up on my discount rate to 8%. That's the same that I use on Airbnb because I'm a little nervous about travel, right? It should be a industry that gets some negative, some headwinds in 2026. I'm not planning to travel anywhere. I don't know if it's because of the war, but first I want to use my capital to buy stocks. So I'll wait for me to have a boom year and then I'll buy stuff and take vacations. But for now, I want to preserve my capital. So I don't know if other people are thinking about travel, but that's one example of how travel is going to see a little bit of a headwind. Like, hey, it's going to slow down. So I don't know how much that headwind's going to be. So I'm going to raise my discount rate. Even with all that, discounted by 52%. When we look at the earnings per share, I'm using a PE of 18 because they're growing. They're high margin. It's a really good business. So I don't agree with the market pricing them at, a 14 or a 12 PE. I'm going with an 18. I'm only paying 18 for booking. Growing their profits. Now, the forecast called for a better growth rate, but again, we got some headwinds. So I'm going to go with 12. 26% discount. So when I blend the two, a 46% discount, that's a compelling discount on booking. Booking's solid. It's a buy in my book. It's a good stock, good company. I'm good with booking. It's a solid stock. Compared face-to-face, mano a mano, compared to Airbnb, Booking's a better buy. Booking is good and better, I think better than Airbnb. And FYI, I own Airbnb stock. I'm not calling my baby ugly. I still like Airbnb. I just think Booking has outperformed Airbnb, is a better stock to own at this time. And I'll just call it like I see it. So thanks for asking about that, Anderson. Good to see you. Thanks for coming in. Peyton is on board. How you doing, Peyton? Go United Therapeutics. I'll second that. We should get big foam fingers. United Therapeutics. Go United Therapeutics. All right. So I'll put that on the list. We take a peek at it because we owe a valuation for Ricardo. ASML, which I'm in the mood to take a look at ASML. But before we do that, let's take a look at the stock market. It's looking pretty green out there, Daryl.
Yes,
Looks like we fertilized the lawn, put down the fertilizer, the sunshine has been shining, and the grass is green, except for Nvidia and Apple. Cisco's down, computer equipment, huh? Interesting. The software space, man, this is like, is the software space, are they going to be hurt by AI or helped? Man, I wish I was smart enough to tell you that. I don't know. I'm not smart enough. But I could tell you that I've been spending a lot of my time working with AI, working with most recent app that I really have spent a lot of time with is OpenClaw. And I don't have a lot of time. Like this past week, I was like just trying to keep up with all the stuff that I had going on. But I think this week I'll probably have a little more spare time. OpenClaw has just been phenomenal. Have you played around with OpenClaw or?
I have not, but you're getting me interested in it when I saw
You
a
gotta
couple of
do
your
it.
videos.
Everything. So just in a nutshell, okay. Everything you do on a computer, you personally, you can ask OpenClaw. Now install OpenClaw on a secondary PC, or I think you're an Apple guy, so on a secondary device, because it's so darn powerful that if you're checking your portfolio, let's say on this workstation, I don't have OpenClaw installed, and you're putting in your password and everything, it could be observing all that, and maybe it starts storing that. Next thing you know, your data got hacked, and voila, you're vulnerable. So you install it on another PC, but everything that I do, updating my portfolio, creating things, and OpenClaw can do it. It's done a phenomenal job to this point. It's a big leap forward because I've been trying to get AI to help me do a lot of the tasks that I do. And Gemini I tried with Gemini, didn't get there. I tried with Claude, didn't get there. And I think Anthropic is, my observation is they're trying to rally around Cowork because the excitement around OpenClaw is so high. But back to software stocks. I still believe that it's irrational to think that Salesforce is out of business. Like, oh, sorry guys, but we don't need customer relationship management anymore. Are you kidding me? Let's think of a giant business. Let's think of NVIDIA. Hey, NVIDIA, you don't need to use Salesforce anymore. Just go ahead and use OpenClaw with Gemini and just have a big hackathon this weekend and build yourself your own application. You're putting your business at so much risk. There's no way they're going to do that. Maybe in 10 years, we're going to have that as an option. But I actually know that Salesforce is developed. They already have AI, agentic AI. They've had it for like 10 years. They just couldn't sell it to people 5 years ago. They called it Einstein. And now they've rebranded it as Agent Force. And the long and the short of it is, I think that companies will adopt AI slowly because AI is super powerful, but it's not secure. It's not controlled. It's not, you don't have the governance over AI just yet. And when you look at financial statements, like I have these guys ready to go. When you look at these here, this is a Chinese company that has their stock here in the US. This is all standards based, accepted accounting principles. These are all things that are locked down in governance, and people could lose their jobs if something is deviated here. Officers at a company can get in a lot of trouble if something's critically wrong and they knew it was wrong. Back to the AI stuff, I just think it's going to take time. And I think that Salesforce has to have a strong AI strategy. So does Adobe. Datadog, I think, is doing fine. Intuit has to have a strong data strategy. But I'm hearing foolish things like, oh, you don't need TurboTax. You could just have Cowork or Anthropic, Claude do your taxes. I'm like, you'd be, in my opinion, I think you'd be taking on so much risk if you report to the IRS, not using a system that you completely trust. I don't want to put myself in that place because if you make mistakes, there's a lot of penalties. And the IRS, they play for keeps. There's no way around it. You will pay them the money. And so I think AI is going to take a while. So this space is going to be potentially a space that helps me build a lot of wealth. I'm invested in Salesforce, Adobe, Intuit. And I'm going to keep my investments. I actually watched, I think you watch The Compound. Do you watch The Compound with
I do on
downtown,
occasion. Yep,
downtown
I like.
Josh Brown?
Yeah, I really like him.
And, they had another investor and he's more of a value investor and he talked about software and he made a case for CRM. He made a case for these software companies. I agree with him. And FYI, I've been in the software space for more than 25 years. This is my backyard. This is Salesforce I've known of for 30 years. Okay. I remember when they started. Mark Benioff, he worked at a company that I worked at. So this is a space this is my backyard. I know this space better than any other space that we're talking about. And I think it's going to make me some money down the road. All right. So financials is having a good day. All right. Looks good. Meta. Boy, they're licking their wounds, huh? The wounds are pretty deep. Oh, look at that. The semiconductor space is selling off a little bit. Microsoft is rallying higher. So I think for a year I've been buying into Amazon. Glad I'm doing that. Going to be one of the most valuable companies, period, on the exchange. Top two. It's either going to be number one or number two. Number one or number two. This is within the top five with the market. And I've been buying up Microsoft. This has been my biggest, receiver of capital in the month of March. And it's going to receive the most capital in the month of April. All right. So our friends over in the oil business, they're over in Houston, counting all that money they're making. Thinking, what kind of yacht am I going to buy with all this money I'm making? All right. So enough said there. Let's figure out where there is some money to be made on some stocks. We're going to ASML. ASML, if you don't know who they are, they make these gigantic machines. These things are the size of a large school bus. This school bus is pretty darn big. And each machine is like sold for, I don't know, 50 million a piece, 200 million a piece. And I'm not exaggerating. That's the sticker price. It's like, whoa, does that come with a warranty? No, you got to buy a warranty and you got to buy a service plan. Oil changes are not included when you buy your ASML machine. And these things are very unique when you want to make the very best semiconductors, because that semiconductors these days, you got these phones and you got these devices getting smaller and smaller, more powerful, more energy efficient, all the above. Things are just gotten so much better. It's because the semiconductors can be made in such small units. And it's the ASML equipment that does that. So they're very unique. They're one of one. Nobody can compete with them. And what's interesting is for a while, this thing was selling off. They were like, ASML is terrible. FYI, on this channel, on streams, on videos, I said, I am buying ASML. I bought ASML. I bought it at the right time. And it's flourished. It's flourished. It's done really well. Look at that, 88%. So the pricing is not perfect for ASML. The pricing was great in 2025. Compelled me to buy. But right now, let's see where it's at. I've got a valuation on them. Forward P is a little expensive. We just saw booking 12 PE, forward PE. This one's 39. Holy Toledo. What's NVIDIA? It's like 18. Whoa, I could buy NVIDIA for 18, but I have to pay 39 for ASML. Jeez. And I just think it's a little bit discounted. Now, when we look at their growth, good growth. Good growth on the trailing 12 months. Now, we got a little bit of ups and downs, and the last 2 quarters have been a little light, okay? And I think this is why you saw the big sell-off is they started to guide, call it a year ago. They started to guide and say, hey, I think we're going to see a lack of demand. We're not going to be able to grow as well. And investors were a little fickle, and they moved away from the stock. Back to the point I made earlier that certain conditions, it's not like it's going to stay that way forever. At ASML, I mean, it's not hard to think about the demand that this company is going to have for the next 5 years, 10 years. It's going to be extreme. We're going to need more semiconductors. We're going to need more things. And the innovation that's going to happen is probably going to require their technology. So, lesson learned, as the market sells off a stock irrationally, it's an opportunity. So revenue is looking good. We'll look at the forecast in a bit. So they produce free cash flow. That looks terrific. Their gross margins, they sell a product, right? They have to put capital into it. They have to put materials, labor, burden, and that's why their gross margins are not like those beautiful margins that bookings had. They're at 53%, which is still good. So they have a super moat. They are growing. Let's see what analysts are thinking here. And man, look at that growth. That is looking really solid, folks. That's looking super solid. Profits are going to expand, bringing down that PE ratio. So investors are looking at this number saying, I'm buying a company with one of the best moats in the business, just super moat. This thing, think of a castle and you got this moat with alligators on it. And on the towers, they have like the best drone system that can attack the opponent you've ever seen. This is a super moat. All right, so ASML, solid business. Let me kick it over to Daryl. He'll take a look at the charts, and I'm going to come back to show you the valuation on ASML.
Okay, so we're going to start with a longer term view, just so you can see where I put the auto support and resistance lines. And we also have a 5-year trend line that started back on the 14th of September in 2021. It's connected to the point in 2024 and then later in 2024. And they blew above that trend line. And now it looks like they're coming back down to test it. So let's zoom in now so we can get a little clearer picture on the most recent activity. We have a 21-day that's declining, 50-day that is increasing, but looks like it's getting ready to level off and maybe make a downtrend. They're trading right at that trend line today. They're down 1.99% as we're in a live trading day. They're trading above an upward sloping 200. They're right at the 40 line on the RSI. So I'd probably be remiss if I don't annotate this just so you can see this, because this is very important from my work here. I'm going to put a red line. We have higher prices right here. Prices going up, and we have basically a bearish negative divergence on both the RSI and the PPO. So they are starting to trend down since that point. So that means the bearish negative divergence did take place a little bit. They're down about 18% from this high here. Accumulation still looks good. There was a little bit of distribution this past week, and money flow has currently moved into bearish territory. So this is on a market up day, and they're going down right around 2%. So one thing I would keep an eye on is if they break down below this trend line, especially by the end of the week. This week's going to be volatile because of portfolio rebalancing across the professional managers. So see if it holds above this trend line at the end of the week. See if we can get a reversal in momentum, because it's definitely to the downside at the moment.
Thank you, sir. All right, let me get back to my screen. And we got some good comments coming in, Daryl. Look forward to getting into, looks like we got some younger investors, somebody that wants to look at NVIDIA, and, be a little patient, guys, because we got some comments ahead of you. But I really do want to provide something out there, because one of the reasons I have a YouTube channel is to help investors, period, but especially young investors, because speaking, looking back when I was like 25, it was kind of a solo mission with books. And now we got YouTube. You guys, such great access. So I'm going to comment later on that. All right. Enough of that. Let's talk ASML valuation. The stock's discounted by only 5%. This is a great business, right? But I'm not buying any shares right now. It's just not priced well enough. And not too long ago, it was discounted. It was a juicy discount, like just a beautiful situation. Took advantage of it. I'm good to go. So that's where I'm at with ASML. It's just a hold for me. It's not a buy. It's not good enough pricing wise to be a buy. And we're in a market where, hey, not all is perfect in semiconductor land. When we look at their stock is under some pressure, and we look at semiconductor, this is where ASML lives. Okay. And these guys, they're getting hit today. Okay. And semiconductors have flourished. I mean, that's obvious for the last three and a half years. So ASML is a hold. Good to hear from you, Carlos. And we will get to SYM later, because I wanted to turn my attention over to United Therapeutics. It's up 12%. What's going on with this, Daryl? Why is this company up so darn much? I can't put my finger on it. And I think it was Peyton that asked about that. I don't know if you know why United Therapeutics is up so much.
I do not.
Well, let's ask Gemini. See if they could take this on. It's surging today, primarily due to major clinical breakthrough in its lung disease pipeline, a massive share buyback program. Yep. But this news it's like 18 days old. And then the stock buyback. Okay. Because it's a smaller cap, right? This is a $26 billion market cap company. And when they announced a $2 billion stock buyback, I mean, that's like 7-8% of their shares. That's a pretty good chunk of their shares. So maybe they put a big buy order. United Therapeutics went to their Robinhood account on their phone, said, "Hey, buy $2 billion of the stock." I'll take it. I'll take it. It's great to see this. I'm a shareholder. I really like this business. I think it's terrific. And I think their forecast, this is, their forecast looks terrific. And their margins are fantastic. The profitability is excellent. So this is a good one. All right, great. A little good news on a Monday. Nothing wrong with that. Nothing wrong with that at all. Let me take a peek at United Therapeutics from a valuation perspective. Excuse me. Would you mind sharing the charts on United Therapeutics?
Sure.
So it's still discounted by 23%, but with the stock rising so darn much, it's a smaller company. Okay. Now, smaller businesses come with higher risk. I want a better discount. I want a higher discount if I'm buying a smaller business. If I didn't own United Therapeutics, would I be compelled to buy more shares or buy shares, to begin a position? I'd be teetering between doing it and not doing it, because 23% just doesn't make me jump in, not with the current conditions we're in. So that's where I'm at with it. But again, I'm not in at this stock price. I'm in at a much lower price. I think I've doubled my investment in United Therapeutics. So I'm just going to enjoy the ride. I'm going to sit back, enjoy the ride, enjoy the scenery. And let's see what Daryl's got to share on United Therapeutics.
Yeah, it's a pretty good looking chart. I saw back in September the 2nd, they had a 33% day. They're up 11.9% right now. They do have a black candle, so it opened higher and is drifting lower at the moment. The RSI isn't quite to overbought condition. We had a bullish crossover in bullish territory. Got a little bit of distribution over the past month, but it's still near 52-week highs. And like I said, money flow doesn't get updated until the end of the day, but currently it's in a neutral position. They're trading above an upward sloping 21-day, 50-day, and 200-day. They're all in the correct order, which I could probably go look at 500 charts today, and only about 100 of them might be in that condition. So this is a good looking chart at the moment.
Yeah, man. Geez, when something works, it works for a while.
Yep.
So I was surprised when I looked at the exchanges here, the indexes, and man, I thought it'd be up higher, because when I look at the heat map, I guess the heat map's changing before my eyes. Yeah, we're seeing some red. We're seeing some red in these spaces that had been, really, really going higher. Understandably, maybe their investors are cashing in some of their gains. Okay, that makes sense. All right. Okay, so let's talk about WeRide. WeRide is whoa, look at that. Up 4.5%. What does WeRide do? Now, they do autonomous vehicles. Now, they don't make cars for you and I to buy. They're making cars or vehicles that are going to be fully autonomous and be sold to companies that want to operate these autonomous vehicles. I think the future is going to be big for this space, because you could think of all kinds of use cases, from, of course, robotaxi. You saw garbage pickup, trucks and so forth. So they are classified as a technology company, and they create their vehicles, Chinese company. Now, the reason I wanted to look at them is that they announced their earnings last week. I didn't get a chance to look at them, but their growth is really fast. And I thought I had one that was marked up. Here we go. So they grew revenues for the full year by 90%. That's really good. And in the quarter, they grew by 123. They're not very profitable because the car business is not overly profitable, and they have to put so much darn technology into these things. But I think a couple of things are going to happen for them is as time passes, they're going to figure out how to make these units less expensive, and that's going to expand their margins. And I think volume, scale, economies of scale will come into the picture as well. That's what I think is going to happen down the road. So the top line is super impressive. They are burning cash. Now, they're not burning cash like drunken sailors, but they are burning cash. So they don't have any debt, which is very good. That was very good about them. And when I take a look at WeRide, right, the investment is not a perfect kind of long-term investors investment where it's like, okay, I see the cash flows, I understand them. This is how they're going to play out. No, it's a harder task. And I think you have to kind of abandon valuation models and think of the future and look at this growth and go, okay, they're going to be a $13 billion company in 2029. And they're going to be growing really fast. Do I want to be a part of this ride? Pardon the pun on that one. And they're going to be profitable in 2 years. So that's the question is, are you a buyer based on that? Because when I look at a valuation on these guys, it's not there. I mean, it's a brand new industry. It's, was there a robo-taxi industry 10 years ago? Nope. Now there is. But is it going to be adopted quickly, slowly? Is it, how quickly is this thing going to happen? Well, these guys expect, if anything, they're ready for the world. Like whoever wants to put robo-taxi, robo whatever, garbage pickup, whatever that be, these guys can get you going. But the valuation just isn't there. So the investment on WeRide is speculative and high level qualitative is the best that I could do here. Very impressed with their revenue growth. What do you think of WeRide, Daryl?
$200. This is a new company, so the 200-day didn't start until 14th of August, but it's been on a downtrend. Looks like it's trying to level out here a bit. The 50-day is declining. It looks like they tested that level today and then have been pulling back slightly. 21-day is upward sloping. We had a big volume on the 20th. That would have been Friday 2 weeks ago. And the 23rd would have been the Monday last week. And then the volume is declined just a little bit, but on those days we had pretty big gains on that high volume. So we had some convicted buyers. It is trading right at that 50-day. The RSI is above the 50 line at the moment. They had been right at the 60 line, pulled back a little bit. So that's bullish. Anything above 50 is bullish. On the PPO, they're below the midline at 0, so they're bearish at the moment, but they're making progress to move into bullish territory. Pretty much been in distribution for the past year. I do see a good bump this past week based on all this volume and buying that was occurring here. So we do have an accumulation line that was moving up, a little bit of a dip towards the end of the week, but
yeah,
I don't
maybe
know, like you
investors
said,
are digesting that 90% growth and going, wow, that's really good growth.
Yeah.
Good stuff. Thanks, Daryl.
You're welcome.
The next company I want to take a look at also announced last week, and that's Cadeler. And Cadeler, what they do is they install offshore wind farm turbines, and these turbines are powered by the wind or moved by the wind, and they're quite, they're headquartered in Denmark, so they're right in the heart of Europe. And the investing story that I thought was a good one is, okay, well, Europe's likely wanting to get energy independent. They power a lot of things using natural gas and so forth. Well, if they can get a lot of power from installing these guys, these wind farms, maybe they're going to be quite interested in hiring Cadeler, which is an industrial stock doing these installations to install these wind farms. And at times, this stock has really moved, but more recently, it's kind of been on a downslide, which to me is a little bit of a surprise because, yeah, we got this war going on. It's making natural gas more expensive. It's all kinds of factors I think are making Cadeler more valuable, because if they can generate power using wind and you can generate it in your your local ocean, you're good to go. I mean, why wouldn't you do that? So PE ratios are super low, 6.5. Now that's kind of low PEs for construction companies, because that's what these guys are. That's kind of normal, but 6.5 is really low considering that they're really growing. So their growth is good this year, 70%, and then 36%. And for some reason, 6 analysts are covering the stock. They think it's going to slow down in 2 years, which is interesting. And it's one reason to be cautious about the stock. So can you take a look at the charts there and try to figure out, why is the stock selling off? Why does it have these periods of time when it just goes up hockey stick style?
Yeah, so they had reached the low over the past year, about 15 and a half. It was on the 21st of November. Then went on quite a run, up 71%. And now it looks like they're down about 18%. So they still had a good run. The 21-day is declining. It crossed below the 50-day. So short-term momentum is to the downside. The 50-day had been increasing. It looks like it's going to be leveling off and maybe head to the downside as well. The 200-day is still increasing. We had a lot of volume back here in November and December, and it's pretty much been right at or below the 50-day moving average. They are getting closer to being oversold, so they're currently at 36, so they're below the 40 line. They have been on a sell signal, or they had a bearish crossover, I should say, on the 23rd of February. And then we got an RSI confirmation when it transitioned below 50 on about the 4th of March. So we had some signals telling us it was headed to the downside. How far does it have to go? I don't quite know. I am looking back here at several support levels back in May of last year, June of last year, July of last year, August of last year, and almost in October. So we do have 1, 2, 3, 4, let's call it 5 times that it has reached that level and pushed back. It did break above, and now it's coming back to test those. So this might be an actual opportunity to, step in here because it looks like it is getting to support. If you want to be a little bit more patient, I'd keep an eye on maybe that 200. That'd be down around $21 or so at the moment. So if you're looking for an entry spot, I'd keep an eye on that 200 day because it does have seemingly good support right around that level.
Very good, sir. Thank you. When I value Cattler, I take a very high discount rate. This is a technology that, could it be disrupted? I don't think so, but I think I'm not all that familiar with it, so I'll go with a higher discount rate. But I'm making the numbers as conservative as I can. I still has a really nice discount. And the big story of where's power going to come from, right? You got companies like Microsoft wanting to restart 3 Mile Island, which is a nuclear site. That was proven to be like maybe that was the worst atomic energy disaster we've been faced with here in the United States. They're like, hey, let's crank it up to power these data centers. Well, how about using Cattler? Like put a data center near a shoreline and crank out some power, use some batteries, store the power. That way if the winds are calm, then you got battery power. I don't know. I think there's something here. And I think that wind is a proven way of generating power. So we'll see how it goes. That's where I'm at with this stock. And it announced last week. All right. So let's comment on a couple of things. One, I forgot who asked, but somebody wanted to talk about comments on first one's quick. Last half. Thanks for tuning in. Yeah, I'm familiar with United Therapeutics' desire to produce organs in a laboratory or produce them and then have them implanted on people. If they pull that off, man, that's going to be huge. That's going to be humongous. But somebody did want us to comment on NVIDIA. And NVIDIA has been, today they're pretty flat. Look at this. What's going on here, Daryl? For July to now, so that would make it 8.5, 9 months sideways. So interesting to see that this is the most valuable business period out there. Forward P of 20. And you saw ASML forward P of 38. And NVIDIA's growth is far better than ASML's. Their growth rate is expected to be high and stay high. And as we see these introductions of AI application solutions like OpenClaw, it's just going to create more demand for NVIDIA, because it's amazing that, for example, OpenClaw last night updated 162 stocks in like a minute, 2 minutes. And me, if I had spent the time to go update 162 of these stock tickers that are, I've got about 400 in that sheet that you guys are seeing. I got to guess it would have taken me 5 to 10 hours, and I'd be pretty spent after that. So that's big value for me. But I'm sure there's like a GPU farm somewhere that just all of a sudden got this request and burned like, $10 of electricity in 2 minutes. So as you see these introductions of AI, applications that really take off, NVIDIA is going to be the component of the technology that businesses want to get their hands on so they can have it. So overall, I am a buyer of NVIDIA. The valuation's good. The future's bright. Is it super discounted? No. But is it a good investment? I think it is. And 18% discount, but you're getting a company with a strong moat, bright future, very clear future. It's not going anywhere. And I hold NVIDIA. I buy when it sells off harshly. And today it's not selling off very much. So I'll just stay put, not buy anymore. What do you think of NVIDIA?
So I'm a holder as well. And I always go back to this chart because NVIDIA can consolidate for a long period of time before breakouts. So they've been consolidating back from 2023 all the way to the beginning of 2024, and then had a breakout and ran up to another plateau. And they were there from February to May, another breakout, and then they consolidated and another breakout, consolidated another breakout, which I would consider a failure at that point. So I probably should draw this box, all the way over to here. So this is a longer consolidation than some of the other ones. But I was buying about November and December. December, I think, is when I made my first purchase here. And bought it and traded it several times. And I think my cost is about $95 right now. So I'm just holding it at the moment. I think we will have another breakout at some point. The numbers they've been announcing look really good. I don't think anybody is really going to displace them anytime soon, despite all of the media announcing differently. So anyway, they're definitely in a consolidation phase. We have two levels here that are longer term support and resistance lines that close down below this upper one, but it's still trading above this other one that we have here. So definitely in a consolidation phase. I'm not giving up on them. I think they have a great leadership team. They're definitely forward looking. Do hedges where they need to do hedges, and they're just a well-run company. Just got to be patient and let things work out, because I think they're going up at some point.
Thank you, sir. All right. So a company came up, Symbotic. Have you ever heard of Symbotic?
No, I have not.
They do robotic equipment for warehouses. Now, this has been around for a little while, and warehouses they like this equipment, and it really makes their operation fast and so forth. So, I think the demand is going to be there for this type of equipment. I ordered something on Amazon yesterday. It was a $10 item, and I was presented with, hey, if you pay $3, we'll get that component to you in the next 3 hours or 4 hours. It was something ridiculous. Like, whoa, that's crazy. I'm like, or you can have it delivered for free because we're Prime members tomorrow. I'm like, tomorrow's fine. But I'm just amazed how fast supply chains are these days. So Symbotic is in a good space. They're in an interesting space. They're up 121%. Wow, look at that. 392 over the 5-year. The story, right? It doesn't take a lot of, rocket science to figure out these guys are in a space that should grow. Yeah, totally makes sense. $29 billion market cap. Forward P is expensive, 92. That is a high PE. Analysts think there is a discount available. As we look at the growth is good, 29% on a $2.4 billion revenue number. So that's good growth. Now the margins are not good. The margins are kind of terrible. 19%, 20%. Now, it's because they make us a component, they make a machine, and it's just lower margins. They need the capital to build factories because they have to build these machines. Now, not my favorite type of business to invest in because these margins will always create a low ceiling for the stock. And somehow they have a very high free cash flow rate. Maybe they've already built their factories. They don't need to build any more factories. And that could be, in a way, a moat, right? If you want to compete against them, you're going to have to build your factories to build robots that will compete against them. But I'm sure the Chinese are out there creating robots that are going to compete with these guys. And the Germans are really good at this too. Now, their growth is expected to continue, and it's going to continue for a while. So that looks really good. The PE ratio will drop in, call it 3 years. So that's interesting. Now look at their free cash flow. I'm going to look at their free cash flow yield. And I don't know if it's temporary. So their gross margin's low. Free cash flow margin 32. That is an impressive free cash flow, but I'd have to get my head around how they producing so much darn cash, because they are operating with a loss. So they had a change in unearned income. Okay, so it's a paper adjustment. It's not a operational performance-based cash. It's paper-based, so it's not, in my book, it doesn't count as well. This one here would be a pass for me. I'm into AI, love AI, but I want to buy into what's going to be the most valuable AI. And I could be wrong about it because these guys have done great. But I think I'd rather, buy semiconductor companies that make a ton of money, or a technology company that's going to do better. We just saw WeRide. WeRide's growing at 90%. It's like, whoa, that's fantastic. And we know that business model is probably going to take off. So do you have any comments on Symbotic on your side, Daryl?
They are trading at a support resistance level. It looks like they were a SPAC because they issued out at $10. So 21 was the big year of special purpose acquisition companies, and it looks like this was one of them. They didn't go anywhere for months on end, and then all of a sudden shot up like a rocket. I saw 120% change right there in one day. That gets you a yacht pretty quickly. So here's that auto support resistance line. They are trading right at it. Just keep in mind that this is pretty volatile, so it traded way below that at times, but it did come up and test it. I see 3 times there, surpassed it a couple times there, came down below it just slightly, and trading right at that level right now. So I don't know. I can't remember what you valued them at if you did a valuation, but they are trading right at that support resistance level.
I didn't. I think I'd get to negative values.
Okay, 50 days declining, and it did cross below the 200. Let me zoom in here just a little bit more so we can see. So the 50-day cross below the 200. That's called a death cross. The RSI is sitting right at the 40 line at the moment. PPO has been bearish for quite some time. They did have some peak accumulation back here in December, but that quickly faded off and has been declining pretty much ever since. So they are trading at a support resistance level, I can tell you that, but it looks like they've got some downward pressure at the moment.
All right. Is that it?
Yep.
All right. Thank you, sir. All right. And I think we can end on this note. We got a young investor amongst us, which is great to see. Looks like Squeeze Golf Cart. He's 15. He's been in the market for 3 years, and his dad's teaching him a lot of stuff. That is great, man.
Yeah, that's awesome. I'm glad to hear that.
Yeah. I'm going to try to give you just kind of a couple things to take with you that I hope help. And first, if you keep learning and you're 15, so I imagine you're not working a whole lot. Maybe you're getting involved with school stuff, which is where your head ought to be. But eventually you're going to get a job and you're going to start making money. So if you learn and you invest at least 10% of your money from every paycheck, you'll be a multimillionaire. Just the numbers are there. Okay. And that's like a big statement, but you're 15. If you start working at, let's say you get through college, you work professionally at 22, you start putting away at least 10%. Maybe you had a bonus and they gave you, an extra couple $1,000. Maybe you take half of that, you put it in the market. You keep doing that, you're going to wake up with a big portfolio in your future. And keep learning, keep saving, keep
So he's
investing.
getting about a 15-year head start. Well, he's been investing for 3 years already, but he's got a 15-year head start on most people. They don't get started until they're 30. So that's 15 years at 10% interest. That's two doubles that he has an advantage over already just because he started at 15. That's amazing.
Yep. And, keep it simple. Go into industries that make sense to you, right? And challenge yourself to learn new industries. If you don't understand an industry and you think it's important, go learn it. Learn enough to be an investor. You don't have to learn enough to be an expert in the field. But and it's great. And with YouTube and everything else that's online, access to good information and learning is abundant. And you got AI. So if you need something explained, for example, I did the valuation on WeWork. WeWork did not publish their statement of cash flows. So I actually went to Gemini and said, Gemini, produce a pro forma statement of cash flows for WeWork. And it did it because it has, I'm an accountant. So a statement of cash flows could be produced if you have the income statement and the balance sheet, because you're basically taking numbers from both and putting it together. And Gemini did it in less than 15 seconds. As a young investor, if you are in need of some information, you have Gemini, you have OpenAI, ChatGPT, you have Claude. I mean, and they could kind of give you the definition, the explanation, but it's really important that you learn the rigor, or through rigorous kind of research, you learn the principles behind what makes a good business, a business you want to invest in. So thanks for joining us. I hope to see your name on streams.
Yeah,
So that's it.
I wish you the best too, man. It's quite an achievement to be started that early. So I absolutely wish you the best, and keep watching our shows.
And tell your dad that he's getting a thumbs up from me. Maybe he's
I
getting a
agree.
thumbs up from Daryl.
I agree. 2 thumbs up.
If anything, in high school, I think it'd be a good idea to teach people money skills, saving skills. If you want to buy a house in the next 15 years, this is what you ought to do, skills, that kind of thing. Because it seems that, they don't, I don't know if it's a weird topic or what makes people think it's weird, but it's a skill that everybody should have. Because I live in the Los Angeles area. You have to make money to survive here. If you don't make money, you're going to have a tough time. And So enough said there. All right. So it looks like Mike, the dividend investor guy. So A-Lab is going down today. A lot of semiconductor companies were down today. So we did notice that. Whoa, geez. A-Lab makes life exciting. A little too exciting at times. But look at this chart. What is going on here, Daryl? What is going on? And the fundamentals behind this business are terrific. Now, a little voice inside my head is telling me, aren't you glad you sold here? Now, I bought here. Okay, great. I went here and decided, let me redeem my full investment and then some. And then I let the rest of the money ride. And it went up a little bit more. So I was feeling a little bit like, well, that may have been a mistake. But ever since then, it's been like, whoa. Well, I'm glad that I'm playing with the house's money to this point, but it's still painful. Like, what the heck's going on here? It's a terrific business. And these guys, I was talking about, OpenClaw and, ChatGPT and Gemini. When we communicate with these large language models and these chat bots and all this stuff, we from my home office, it communicates to some server somewhere, and that communication has to happen very fast. And there may need to be that particular request goes across multiple servers, maybe even multiple data centers. And that's where Astera Labs is the company, is the communication between clouds, the communication between these big servers. So I think it has a very big place in the future and should do quite well. Now, it's expected that this is cyclical. I agree with that. But we're way over here. 61% growth, 38% growth, 27%. They're making gobs of profit. And I'm going to stick to it. It's discounted nicely. $47%. Man, maybe I got to buy some stock today, man. I might be buying some Astera Labs today. Yeah, I think that might be a good idea. But I am curious to hear what Daryl has to say on this chart, because I think this is going to be a tough one.
Yeah, they've been struggling for a while. They've been on a 200 days actually still increasing. That's quite interesting. But I've noted a downtrend that we tied to the 18th of September, a couple downtrend lines. They actually broke below this one, and then they've just been trading below this or between this these two downtrend lines. 200-day looks to still be increasing. I'd have to go to my other charting platform to see that, where I could go back and look at each day of the 200 and see if it's increasing or decreasing. But it looks like it's starting to level out. They're trading below the 21-day, which is downward sloping. 5-day has been downward sloping. It's been really light volume. So the sellers are not very convicted at this point. Last 2 Fridays ago, the 20th, that was options expiration day, triple or quadruple witching. So we had a lot of volume in the price action. It was 8% drop. We got an 8% drop today as well. They haven't really been above a 50 line since the 11th of February on the RSI. They're in bearish territory on the PPO and have been since October. That's very shortly after this started. And the money flow is somewhat neutral. and accumulation distribution is pretty flat at the moment. So they just need a catalyst, I think, at this point. But they're struggling, that's for sure.
All right. Thank you, sir. And yeah, the whole semiconductor space is not having a good day. So I think that's part of it. All right. So what do you got going on this week with your channel?
Let me pull that up here. I did post my weekly chart review yesterday, and I did post a video on Meta because of that big head and shoulders pattern that I saw in the chart. And I was glad I sold out before this past week because it was pretty painful. But this is a good example of head and shoulders and how to calculate the price objective based on the shape of that pattern. I explain how to connect the neckline and what the head and shoulders are and how to get the price objective. So, and that one played out perfectly in less than a week. So that was a good chart pattern to see. And I see those all the time. So it's not like this is a one-off and, all the rest of them failed. They don't always work perfectly, but they work enough of the time that they can keep you out of some trouble.
Excellent. Thank you. All right. So I think we're gonna stream on Wednesday. I haven't asked Daryl, but if he's agreeable, we're gonna stream on Wednesday morning, same time. I'm not sure about Friday since it's not a trading day. It may not be a day we stream. And then I'm gonna try to stream tomorrow evening and on Thursday evening. So there'll be some good streaming going on. I'm going to be producing a couple videos this week. I haven't made up my mind on the topics, but look for that to be produced on my channel. And we're going to, we have the end of the quarter tomorrow. So that's going to put an end to the first quarter. And then companies will begin to do their financial statements. And I'm going to say the third week of April, we're going to get really busy again.
Yeah.
Do it all over again. All right, cool. In between now and mid to late April, the biggest news item is the war. What's going to happen? How quickly will it get resolved? When will oil prices come down? If oil prices can come down to $70 a barrel, that would be a big help to the economy. And that's going to be the biggest news. The other pieces I think are going to be more subtle, like economic figures and so forth. They're going to be subtle. Everything will be kind of filtered through the lens of, well, the war is going on, high oil prices. So that's why the economic numbers look like they do. Or the economic numbers look like this, but in a couple of months, if oil prices stay high, this is how it's going to look. So we'll see how that plays out. But it's been a really fun stream. It's great to be back. It's great to be with Daryl doing this type of analysis. I hope it's valuable to you guys. Please, if you haven't done so, visit Daryl's channel, subscribe to his channel, support his channel. He puts a lot of effort into what he does. I get a lot of value from it, and I hope you do as well. And if you like my channel, please subscribe and support any way that you would like. But that is it for now. Everybody, good luck. I hope your stocks are going up. I hope you have a good week this week. We deserve a kind of a good week. It's going to be a 4-day stock trading week because Friday is off. And we'll see how things play out. But remember, we've got good stock prices right now. That's my feeling. I want to take advantage of it because every pullback and correction and crash that we've seen in the last 30 years has resulted in wealth creation It doesn't happen overnight. You got to be patient. You got to be smart. Got to do your homework. But that's what happens each time. So I don't think it's going to be any different on this occasion. So that's it, folks. Have a good one. Take care.
Take care, everyone.